Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Welcome to the WorryFree Retirement with your host, the author and creator of the WorryFree Retirement himself, Tony Walker.
Well, hello and welcome to the WorryFree Retirement. I am Tony Walker, and you're about to embark on roughly 28 minutes of information that is geared towards savers. In fact, I like to say this is the only television show in the country that is strictly dedicated to helping savers worry less about money. By the way, people say, well, you know, I've watched this show a little bit. I'm kind of now catching on, Tony, to this concept of savers. I thought you meant people that just didn't spend any money, but we are talking here about personality types. A saver, again, is defined as someone who is more concerned about the return of their money than on it. Certainly savers, of which I'm one, enjoy spending money and enjoying it, but all the more while they want to protect their hard-earned money. And we're going to get into later a little bit about what's going on in the stock market. We're going to talk about taxes, financial headwinds, all kinds of stuff. Got a lot of stuff laid out for you today. We always like to tell the date, too, by the way. Today's date is December 9th, 2013. Because this show is pre-recorded in Louisville, Kentucky, and then rebroadcast, we want to make sure in case you see this and I'm acting all nonchalant about life and maybe something strange has gone out there in the economic world, you'll understand that this is a pre-recorded show. We'll tell you more about how to get in touch with me and some of our advisors around the country later. But first, before we get started, it would be amiss if I didn't introduce to you America's favorite financial sidekick, Mr. Aaron Orander. Aaron, how you doing, buddy?
I'm doing well, Tony. Good to see you again.
Good to see you. December 9th, I got to ask real quick, you got the little one. Again, I don't have these little ones running around. Like I told you last week, our big thing at the Walker household is going to be getting the checkbook out on Christmas morning, so not a lot of fanfare going on at our house with older kids. So you getting ready? It's getting exciting?
Yeah, we're steadily building there. You know, we've got a few presents, stored away in the closets. Going to have to, find a time to wrap them up and stick them under the tree real quick. But yeah, we're getting closer and closer. It's getting exciting.
I love that scene in Christmas Vacation where he goes up in the attic and he's reaching to hide a present and he finds the old one stuck in there. My wife, every time she watches more and more with him, she says, Tony, that guy reminds me of you, some of the stuff you're always doing. It's kind of interesting. I'm going to talk in a minute. My wife and I, speaking of wife, we were at a business conference. She got to tag along with me, had a good time out in Arizona, out in Phoenix area.
Okay.
And we talk a lot about cost, and I know you've heard me at some of my workshops refer to financial headwinds. So I'm going to get into that in a minute. That's going to be pretty interesting and help people understand the effects of headwinds on their money. But you and I were talking, it is the season for gifting and all that good stuff as well. I'm going to cover some things on gifting. Interesting email question came in. We're going to jump right into today's show, by the way. And as I'm heading over to the whiteboard here in a second, you can talk about the free book offer. But I'd like you to read that email question, maybe even put it on the Elmo there, however you want to do it. But what this email question that came in. By the way, folks, you're welcome to email me at tony@TonyWalkerFinancial.com. If you have a question you'd like to get on the show, we'd be happy to try to do that for you. So.
Here's our question right here, Tony. Tony, I hear you say this all of the time, but I still need confirmation. What is the gifting threshold that doesn't send up tax flags? That's from D here in Louisville.
And that's a great question, but it requires a little more thorough analysis than that, because I'm going to show people also with 401ks and IRAs how you can possibly gift money and the tax advantages of considering to do so. I'm going to get over and talk about the headwinds real quick, Aaron. Tell them about our free book offers throughout the country. Oh, by the way, one of the books, folks, is Don't Follow the Herd. I'm really excited about this, Aaron. This book, I just found out while I was at this conference, is going to be used as a supplement in a lot of college curriculum that's going on. So independent advisors are going into colleges, offering workshops, and this book is going to be one of the main books one of the companies is going to use. And we might even give one away here, maybe not on today's show, because these are very coveted. Have you've seen the coveted cow keychain?
Oh, yes.
Yeah, don't follow the herd. We'll talk about this, folks, as we talk about the stock market later. I want you to listen to the message to this cow keychain, folks. Can we kind of get a zoom in of the cow keychain first? There it is. It says, "Don't follow the herd." Okay, let's listen to it.
My money.
That's you, isn't it?
No, it's not. I paid big bucks for a guy to make that. I couldn't do that. Maybe back in my younger years, back in college, I could have pulled that one off. But no, and the point is, this is your money. This is your money, folks. It's not the financial world's money. There's a cute story about that. I gave that away at a workshop once, and a guy was supposed to follow up for an appointment. And I talked to one of my assistants. I said, how come we haven't heard from that gentleman? He said he wanted to meet. And she followed up with him, and he said, I'm mad at that Walker fella. And so Connie said, well, what happened? Said, well, he didn't tell me how sensitive that little button on there is that says my money. And apparently he was at church as they were passing the collection plate.
Oh, no.
The thing accidentally went off. So actually,
this is my money.
Kind of interesting story. Tell them about the books here, and I'm going to get over to the whiteboard.
No problem, Tony.
Right.
Okay, we just want to remind everybody that if you go to TonyWalkerFinancial.com, his 3 books, they're going to be absolutely free to the first 10 people in each market to email him at TonyWalkerFinancial.com, okay? This is a $49 value, and you get all 3 of his books free. These would be great Christmas presents since we're talking about 'tis the season. You've got Tony's book, The Worry-Free Retirement, Don't Follow the Herd, which we were just talking about, and Tony's latest book, The 3 Personalities of Money. So again, log on to TonyWalkerFinancial.com, be one of the first 10 people to request the book by filling out the information above. Tony?
Very good, Aaron. And I want to cover this real quickly. I do this in workshops sometimes, and it reminds me about these concepts of headwinds. Folks, as we talk about, savers don't like cost. And those 4 types of costs, we're not going to get into inflation here today, but the 4 main types of costs that most savers have no clue how to deal with are taxes, premiums, insurance premiums that is, fees, and interest on money that banks charge. And I want to illustrate to you why this is so imperative and why you have so many costs going on that you're probably not aware of, and why it's a good opportunity when you watch a show like this to get with me or another advisor we have throughout the country. Again, if you're watching this show from the Southern Kentucky area viewing area, I would personally be happy to sit down with you and go over your situation at no cost. If you're outside this viewing area in some of other states, we have advisors that can help you do the same thing at no obligation or cost to review your situation. But let me walk through this with you. Okay, let's kind of zoom in on this. Rhonda here at the station at Wave 3 in Louisville drew this pretty good. You don't want me trying to draw airplanes, folks. Probably get arrested, Anyway, this is the state of Tennessee. All right, my wife and I flew out from Nashville, Tennessee this past Wednesday to go to Arizona. So as you can see, the plane is heading towards Arizona. Now, basically, if you'll remember back on Wednesday, we had something, these are jet streams up there, very extreme, I mean heavy-duty winds against this plane. Now, as I understand big aircraft, possibly it was going 550 miles per hour. But if you have a 100-mile-per-hour headwind, Aaron, I know you can do math pretty well, that really means your airspeed is what?
450.
450, very good. So although maybe the airspeed indicator says 550, your ground speed is really 450. So what was funny about these headwinds is I didn't see any of these. I'm riding in the plane and it's a little choppy, but I never saw them. But I realized it took us roughly 4 hours and 15 minutes to get out there. Now think about the fuel efficiency of the plane. I'm sure it gobbled up a whole lot more fuel. It took us a whole lot longer to get there, and folks, it was a pretty rough ride. I mean, I don't get nauseated on planes, but this was pretty close. My wife is a white knuckler. She does not like this kind of stuff. So, all right, you with me so far? Those were headwinds. You couldn't see them, but it had a direct effect on the plane. Now let's slide over here. Notice coming back, all right, we left Arizona on a Saturday, beautiful day. No wind in sight that I could see or, see the palm trees or whatever moving around. We flew back, all the way back to Nashville, same plane, by the way, same size plane. And we got back in 3 hours and 15 minutes. In other words, what happened, we had a tailwind. So the tailwind was pushing the same plane. I'm sure it had much more fuel efficiency, got us back to Tennessee, what I thought was in record time, but really what it was is just the environment in which the plane was flying was much better. So what we do in our practice, folks, this is the problem. You have financial headwinds all the time. You're paying way too much in taxes. We talked about Social Security taxes. Way too much in fees. Sometimes way too much in insurance premiums and interest on your money. These are headwinds, and unfortunately, kind of like the headwind looking out the plane you can't see, unless you meet with a retirement specialist that understands how to find these financial headwinds, you're going to miss them, and it's going to affect your money and could cost you thousands, if not hundreds of thousands of dollars over your lifetime. Well, here we are in December. The stock market's roaring. We even have savers who are wondering maybe if they've missed the boat, should they jump back in the market now? We're going to talk to you about the stock market and why you need to be very careful at this juncture. I'm Tony Walker with the WorryFree Retirement, and I'll be right back. How would you like to find a trusted advisor in your area who practices and preaches the same safe money solutions that I speak of on this program? Well, you can by simply logging on to TonyWalkerFinancial.com and clicking on the Find an Advisor link. Once there, just fill out the confidential profile and submit it. This free service is available to savers who are serious about safeguarding their money. So what are you waiting for? Stop worrying and log on to TonyWalkerFinancial.com.
Tony, I watch you on WorryFree, and you seem to be totally against stocks. Can you tell me why you don't agree with stocks?
You know, that's interesting. I've been doing this for almost 30 years now. I've been on TV up in the Louisville area. That's what she was referring to in Wave 3 for almost 6 years. Before that, I actually had a TV show called Your Money Matters. A few people remember that, and that's why it's no longer on. But that was back in the early days. Those were fun days. But a lot of people, because they're not real familiar with this information dedicated to savers, they don't hear me talk a lot about the stock market. Or if I do talk about the stock market, sometimes it's not in real favorable terms. It's not that I have a problem with the stock market. Obviously, you can make a boatload of money in the stock market. And even for savers, sometimes certain types of stocks, mainly what we call value stocks or blue chip stocks, we'll talk about those in a minute, do have their place. But savers have to be very, very careful putting too much in the market, and that's why you don't hear me as a retirement specialist dealing in safe money talk a whole lot about the stock market. I'm going to touch on this real briefly to answer that question, and then I'm going to get into the gifting issues that we want to talk about as well. I want to focus on this term right here, fair market value. You know, it's interesting, fair market value does have a definition. People might say, well, I don't even know what fair market value even means. Here's a good definition of it. And even think about the recent housing issue we had where everybody rushed around and bought houses and rental properties and all these things down in Florida and a lot of these other big cities, and we saw the bubble, as they call it. Let me explain that. Fair market value is defined as a willing buyer and a willing seller, neither under compulsion to buy nor sell. Now that is true fair market value. Think about that. So let's say you're selling something, okay, and you're in a hurry to sell it. Maybe you're in dire financial straits, okay. Now you're having to sell that item under compulsion. The buyer comes along and understands you got to sell it, and the buyer buys it probably for what? Less than really fair market value. This happened in the real estate industry. We saw this years ago. Let me show you some little dots up here. So let's say these all represented houses, okay? And what happens is, and this is why people talk about the Fed, what they're worried about with the Fed. So the Fed injects all this money into the market, all this basically free money, or what economists call fiat money. They're printing money, injecting into the market. The banks got a hold of it. So everybody's out here and they can now borrow boatloads of money. Now think about this. If everybody can borrow a whole lot of money, that means they have more money, which means that the supply of these houses, let's say in Florida, is limited. So think about this. Aaron, if you're selling a house in Florida, and let's go back about 8 years or so, and everybody's coming to you and has all this borrowed money or free money, wouldn't you think you could ask more for your house?
Absolutely.
Absolutely. So what happens is that drives up the market. Now everybody else's house around you starts going up. Then the buyers, now they're acting under compulsion because they go, oh my gosh, look at the values of the houses in Florida going up. I got to get in on this deal. So they all dump their money in. But then when the party's finally over, or everybody finally realizes, hey, when can I sell my house? Maybe the market's topped up. That's called the bubble has burst. Then we see, and I've had some friends that this happened to, somebody paid $800,000 for a house down in Florida 5 years ago. Now it's worth $400,000. That's because there's no money, the market's dried up, and you have no buyers. Now let's go back to this. Let's imagine these are all stocks. Okay, you with me, Aaron?
Yep.
Could be the same thing. We have all these stocks, and guess what? The Fed has pumped a lot of money into the economy. There's been a lot of people with money on the sidelines, savers, and this is what frustrates me, actually kind of angers me quite frankly, because savers who used to get 5% in a CD, let's say, and were happy and comfortable with that, which was a nice rate of return, never would have considered the stock market because 5% was an ample rate of return. Now, Aaron, I know at your age you're not buying a lot of CDs, but now they're going out there and maybe they can get a 1% CD. So Aaron, if you were a saver and all you got was 1% on your money for the last 5 years, and you're watching all these people in the stock market make 20 and 30%, what would be your human natural reaction?
I'd be a little upset.
And what would you probably be tendency to do here?
Put my money in the stock.
Okay, but possibly the market could be very high, right?
Yeah.
Okay. Folks, this is dangerous turf we're in right now for savers. By the way, I don't know if you have it ready in there. The book I wrote, Don't Follow the Herd, this is a wonderful book. In fact, if you went on to Amazon, I hate to start selling books for Christmas. This sounds kind of hokey, but I'm serious. This would be a good book to get somebody for Christmas. If you have a saver in your life that's really trying to learn more about money, you could go to Amazon.com, download this book. We told you how you could get the first 10 people to go to our website could get it for free, but let's say you miss out on that. Order the book, Don't Follow the Herd. I want you to look at the cover closely. Aaron, look at that cover. See all those cows on the top that are just aimlessly following each other and falling off the cliff?
Yes.
Okay, let's go to the next shot and focus on that cow in the middle. There's a funny story about this. When I first wrote the book, I gave this to one of my clients who had a small child who was 5 years old, and Mike had this book laying out on his desk there, and his child walks by and he said, "Daddy, I want to be that cow." And I'm thinking, hey, a 5-year-old even gets this message. So folks, you might feel like you're that cow right now, that you are not with the herd, that you're not prospering, that you're not going great guns in the stock market, but you've got to remember something. Sometimes it's safer not to drink downstream from the rest of the herd. I want to show you something real quick too. Let's go to Dalbar here. This is an interesting study on the Elmo, and Aaron, if you're ready over here, I want you to understand too how difficult it is to make long-term returns. Now this is a factual study that was done by Dalbar. They looked over the last 20 years, and this is why Don't Follow the Herd is so pertinent, because Don't Follow the Herd looks at how human beings really react. Folks, most people aren't sitting around with money in the market and they time the money perfectly and they get out at the right time and make all these returns. Like we talked about last week, if your money has gone up 25%, unless you've liquidated those stocks, you haven't made 25%. It's all on paper. This is what Dalbar discovered. We noticed over a 20-year period ending in 2009, the S&P made 9%. Slide down there to the asset allocated investor. That is the diversified investor that we're all told needs to diversify their investments. Look at what the average investor made, folks. Over that same 20-year period when the market, Wall Street, made 9% roughly, the average investor investing in mutual funds and diversification made a whopping 2.56%. Thank you. So folks, here's the moral of the story before we take a break. Don't follow the herd. If you're a saver and if the stock market makes you nervous, certainly you might want to consider a small portion of your money in the market. We're going to talk about value investing in a minute, and an interesting article about how one value investor, a large mutual fund company, has a lot of money in cash right now for fear of what we're talking about, which could be a large market correction and have a huge effect on savers' value. So we need to be careful here. I'm Tony Walker. I'll get back to that gifting thing I promised after this break. For nearly 30 years, I've made it my life's work to help savers worry less about money. And now I invite you to personally contact me to discuss your situation to see if I can help you. It's very easy. You just log on to TonyWalkerFinancial.com and click on the Meet with Tony link. Or, if you like, you can attend one of my free financial workshops. As always, there's never any cost or obligation to meet and discuss your situation in private. So what are you waiting for? Log on to TonyWalkerFinancial.com. Having a lot of fun here, folks, and we're getting ready to run out of time. Tony Walker with WorryFree Retirement, the only show in the country dedicated to helping savers worry less about money. Let's cover this gifting idea. Many of you have 401ks, IRAs. Now I'm talking to those people who can afford to consider gifting fairly significant amounts of money to kids. Remember our first video, the email that Aaron talked about. Under current law, you can gift $14,000 per year to anybody you want, tax-free. So I'm going to show you what you can do, and next week we're going to cover this in a lot of detail. But let's say you've got a 401k or IRA. There's 5 main options with that 401k. You can convert it. Next week we'll talk about all these, folks, so you want to stay tuned. Insure it, spend it, defer it, and let's talk about gifting it. All right, let's slide over here. I ran some calculations. Let's say you had $500,000 in a 401k or IRA, and just for the heck of it, let's say you deferred it for 30 years at 5%, you would have $2.1 million. The problem is we have what's called the tax tumor buried into that. So in other words, you've deferred it, you haven't had any use or enjoyment of the money, and when you die one day, the government's going to step in and take a huge portion of the money, and the problem is we don't know what the tax laws are going to do. So this is really not a good strategy. The second option is, what if we tried a gifting option here, where we're going to pull out $14,000 a year for 30 years, all right? That would leave you in the IRA or 401k $1.1 million, which means possibly less taxes, okay? Less taxes. Sorry for the scribble, I got to rush here. Less taxes. And you say, well, hey, Tony, what happened to the $14,000? We'll talk about that next week, but let's imagine you paid the tax on it. Let's say the tax is $4,000, and you gave $10,000 away tax-free every year to your children, and they in turn, look at this strategy, took that money for the next 30 years and invested it in a Roth at 5%, which would give them $697,000. But here's the big deal, okay? If you were to do this at your death, it's tax-free because you've already given it away. And if they don't spend it now because they're not under the same minimum distribution rules, they don't have to take out a Roth at 70.5. If they left this in another 15, 20 years, imagine how much money that would be. And at their death, it could go to your grandchildren, if that's what they wanted to do with it, tax-free. So folks, this is what we call dealing with the infamous tax tumor. Many of you, and we're going to talk about this next week, are sitting here with these huge tax tumors in your 401ks and IRAs, and you have no game plan or strategy. We can help. I've done this for almost 30 years, and I can assure you we work with hundreds and hundreds of people on dissecting and eliminating, or at least diminishing, these tax tumors. There's no cost or obligation or fee to meet. All you got to do to meet with myself, if you're in the Southern Kentucky area or if you're outside the viewing area, go to TonyWalkerFinancial.com. If you're in the Southern Kentucky area, just click on Contact Tony or Meet with Tony. Either one of those buttons will get you there. If you're outside that viewing area and you'd like to meet with somebody that's trained in a lot of these safe money concepts, simply go down to Find an Advisor in your area and click on that button, and we will have someone contact you. Also, in case you're just tuning in, for the first 10 people that go to the website, TonyWalkerFinancial.com, you'll want to click on Contact Tony, and for the first 10 in all of the markets we're in, we'll send you all 3 books absolutely free, and that's a $49 value. So before we close out, I want to show you something real quick on the Elmo. This is a great article that we're talking about here, and this came out in Investment News. This is what's called a large value fund, this Intrepid Disciplined Value Investor Fund. I've not endorsed them, don't even know anything about them. But what we're seeing here is this gentleman that manages that fund is very, very concerned that stocks are overvalued right now. Now, if you know anything about value investing, Warren Buffett's kind of a value investor. They're always looking for good deals. They don't want to pay too much for stock. So this is not unusual for a value investor to not be in the market. But look at this. Circle that, Aaron. 62% of the company's assets in this fund are in cash. All right? Why is that? Because he knows, and he goes on down to say that, how quickly things can turn and go downward. I think we remember in 08, if any of y'all got caught up into that, you know, the market went down 30, 40, 50% depending on where you were invested. So again, folks, if you're out there, if you're a saver, if you're frustrated about low rates, we can help. There are a lot of different options out there that can increase your return and provide lifetime income. As you know, we're big fans of fixed annuities, fixed indexed annuities. These types of plans coupled with savings, safe investments, and yes, some small amounts maybe in stocks, blue chip stocks, value stocks, can be a great complement to your worry-free retirement. So again, don't forget to log on to the website for any of the information. And by the way, I would like to say that Aaron reminded me even earlier in the show about the book. The Don't Follow the Herd book would be a great Christmas idea. Go to Amazon.com if you'd like to order that and give it to somebody, or read it yourself so you can learn more about a lot of these safe money strategies that are helping people to be worry-free. Well, I'm Tony Walker. We'll come right back with a few closing comments on the Worry-Free Retirement. You stay tuned. How would you like to find a trusted advisor in your area who practices and preaches the same safe money solutions that I speak of on this program? Well, you can by simply logging on to TonyWalkerFinancial.com and clicking on the Find an Advisor link. Once there, just fill out the confidential profile and submit it. This free service is available to savers who are serious about safeguarding their money. So what are you waiting for? Stop worrying and log on to TonyWalkerFinancial.com.
Just a reminder, go to TonyWalkerFinancial.com, fill out the survey that says Contact Tony, fill out all your information there, be one of the first 10 in each market, and you'll receive all 3 of Tony's books. This is a $49 value. These would be great Christmas presents for coming up. So just go there, click on Contact Tony, fill out the information, be one of the first 10.
Sounds good, Aaron. Thank you very much, and thank you for joining us today, and I'll see you next week on the Worry-Free Retirement. I'm Tony Walker. You be worry-free.
You've been watching the Worry-Free Retirement with financial advisor Tony Walker. To ask Tony a question or to find an advisor in your area, log on to TonyWalkerFinancial.com.